So recently I made a video all about the balance sheet and just really breaking down the basics. And you guys can check out that video here. And as I was recording that one, it kind of made sense to do the profit and loss statement as well. Because I mean, let's face it, most of the time when we're thinking about business, it's how much money did we make and how much money did we spend? And most importantly, how much money did we keep? And the income statement or the profit and loss statement really breaks down the majority of that information. So in today's video, we're actually going to break down that profit and loss statement, making sure that we understand the basics, how it's actually put together, and little tips for how we can make it easier for us to understand. So let's get to it. All right, so when we jump into a profit and loss statement, the first thing we need to recognize is that it's going to be broken down into three primary categories. The first one's going to be our income, which calculates all of the money that we've made. The second piece is going to be our cost of goods sold, which is how much we had to spend in order to make the income. And lastly, it's going to be the expenses. How much did we spend? So we're going to go through and we're going to break these apart piece by piece and just cover some of the basics here. So when it comes to income, this is basically our top line revenue. Revenue and income are synonymous, saying, hey, all money that's coming into the company, period. We don't really care where it's coming from, but we do want it classified here under the income category. So let's say we had a real estate company. Maybe we did some flips, right? And so now we have sales income. Well, hey, maybe we also did wholesale assignments. All right, so we have some wholesale income, and maybe we own some rentals, and so we have some rental income. And so the basis of this is we want to make sure that all income is coming in. We don't really care where it's coming from. But in addition to that, we want to separate the different types of income as well. By separating the different types of income, what this allows us to do is say, hey, look, out of 1.6 million that I earned, 1 million of it came from doing my flips. All right. So now, hey, great. Maybe this means we need to focus on more flips. Maybe not. We don't have all the information just yet, but it's great to know where most of the money is coming from. Then we move down to the cost of goods sold. Now, cost of goods sold can be tricky. Cost of goods sold is also referred to as cost of sale. All right. Cost of sale is another concept. And what this means is essentially how much money did I need to spend in order for me to make this income? So let's think about this. If we were going to do a flip here, right? This is our sales income. We're trying to make $1 million doing a flip. What are some of the things that we need to do in order to get that flip complete? Well, we got to purchase the property. Okay. So we got to purchase the property. Hey, we got to do renovations too. Yeah, we got to do renovations on it. Hey, I mean, we're going to pay taxes and insurance on it, right? During our holding period, we got to pay closing costs. Maybe there's some other utilities or lawn care during our holding costs. And then, hey, when we sell it, we got to pay a commission, right? All of those things are going to be cost of goods sold because we needed those in order to even sell it to generate that revenue. All right. Now let's go to assignments. Assignments, pretty much there's no cost of goods sold there. Right, with an assignment of a contract, because we never executed the contract, so meaning we never actually had to buy anything. We basically sold the rights to the contract, right? Let's say a rental property. Okay, well, hey, you got a tenant in there and they're paying us this rent every month. Well, in order for them to be able to rent it out, what do we need to pay in order to own that property? Well, we probably have a mortgage on there, so we probably need to take into account our mortgage interest. Right? We might have some additional taxes and insurance. Most likely we're going to have taxes and insurance, right? Because that's part of the game. We have to pay property taxes and we want insurance on our property. Maybe there's some additional holding costs. Maybe, well, during the vacant months, we have to pay for utilities and lawn care, right? So you get the concept of cost of goods sold or cost of sale. These are costs that we have to pay in order to generate this money. So at the end of the day, the number that we're really concerned with on this P&L to start with is going to be our gross profit. Our gross profit tells us, hey, look, we spend all this money here in order to make all of this money here. That means what's really left for us to spend inside of the company, right? What can we actually spend on salaries, rent for the office, software programs, training or education? What can we actually spend? Well, that's going to be our gross profit. That's going to be the beginning of this. So the first number that we really want to highlight is going to be gross profit. All right. Now from gross profit, this is saying, okay, this is what we have to operate with. So now let's start tracking our expenses. What are we actually spending our money on? Now, one of the things I want to highlight real quick is when we look at, you can see how income is a primary, right? It's a primary account here. And then underneath it, we have sales income, assignment income, rental income, and then boom, we go back to total income because it's this primary category here, all in this block, right? Same with cost of goods sold. And you're going to see same with expenses. Well, what these individual accounts are called, this is called the chart of accounts. All right. This is the chart of accounts. And the chart of accounts can be customized to however we want it customized. So it's important as business owners that we take a look at this and we say, all right, what makes sense to me? Yes. Am I spending on advertising and marketing? Great. Well, I need a whole section for advertising and marketing because now I can break apart all the different types of marketing that I'm using, right? Maybe direct mail. Maybe I got some YouTube in there. Maybe I got some TV marketing, some radios. Maybe I'll just hire a marketing agency, right? Great. Let's break them all apart so we can see our total marketing budget, but we also see how much we spent in each one of these individual categories. And now we're going to want to do the same thing for the rest of these, right? What else do we want in our charter accounts? Well, you know what? I'd like to see office expenses. Maybe it's postage, UPS, software subscriptions we can throw in there, right? For our CRM or something to that effect. And telephone bill, a rent for our office, right? Business telephone, rent for our office, utilities for our office. And the reason I'm saying for our office is because there is such a thing as a home office expense reimbursement. All right. That is something different. All right. I'll make a whole video on that if you guys want. Just let me know in the comments below. Basically, what that really means is, hey, how can I live in my house and actually write off me paying my rent or me paying my personal cell phone bill or me paying some of my utilities? How can I turn that into an advantage? And there's a whole process behind that. So making sure that on our expense, our profit and loss statement, the telephone, the rent, and utilities are for your business telephone, rent, and utilities. All right. And then we got total office expense there. Hey, what about insurance? We probably want company liability insurance. I can't tell you how many investors I've met or how many business owners, small business owners that haven't even considered getting liability insurance for your company, right? That's going to be important because what happens if you get sued? Yeah, you got an LLC potentially to separate your liability, but hey, man, you still got to pay for it. So getting some company liability insurance is going to be important. Maybe you have some health insurance that you're running through the company, right? There's nothing wrong with that either. Payroll, how are we paying people? You know, is there a service fee for how we're paying? How are we paying salaries? Are there independent contractors there we want to keep track of? All the way through professional fees, attorneys, accounting. Maybe you guys decide you want to hire me, right? And get you a fractional CFO in there. Maybe some other consulting fees, right? Automobile, same thing. Vehicle purchase. Maybe you purchased a vehicle here. Section 179, we want to count some of that, right? Or we can depreciate it over time. If not, right? Fuel reimbursement. You'll see here I have a 0.58. And the reason this is important is because a lot of times small business owners may go out and they'll say, hey, look, you know what? I filled up my gas tank. I spent $50. And so they'll think that they can come back here and get reimbursed for the full $50. When in reality, if it is a business mileage expense, right? If it's a business trip, then you can only take off a certain amount of cents per gallon. Now, this has went up, and I do believe it's somewhere closer to 62 cents at the time of this recording. But we always just want to double check that and make sure that that's accounted for. And then, hey, what about our travel, right? Car rental, lodging, meals, travel fare, all of that stuff. Maybe we want to have an entire travel and meals expense catered to that. And then what you'll see here at the bottom of this, remember, everything is kind of boxed in for this entire expense account that's broken into these sub chart of accounts. It comes out to about $303,000. Now, this is another thing that we really want to focus on here, right? Because once we have our gross profit, this is what we can operate with. We're then going to subtract all the expenses to come up with our net operating income. This is essentially our NOI. This is saying, hey, look, after all of these operating expenses, this is what I kept in the company. And that's important. It's important to understand that. Now, once we start to evaluate this profit and loss, it's a lot easier to start going to these total sections, right? But this allows us to say, all right, for travels and meals, man, I spent $11,000. Automobile, only $1,200, $72,000, $50,000 in salaries, $13,000, $51,000 in office expense, $105 in advertising and marketing. Now we know where our money's going. right? Immediately, what I like to do is look at the biggest expense here. Boom, 105. I'm going to tear this apart and I'm going to make sure that all this money is actually being spent on something that is useful and it's actually bringing more money into the company. All right, then I'm gonna go to the next big one, 51,000, and the next 50,000, 72,000, right? That would have been second. But by doing this and having a good chart of accounts structured nicely on a profit and loss statement, we now can start to identify where our biggest holes are, where our biggest spends are within the company. All right, then we have our net operating income. As I mentioned, this is after all operational expenses. This is what we keep in the company. Now, in some of these profit and loss statements, we may see an other income or an other expense category right underneath net operating income. And there can be a majority of different things. Maybe it was income generated for something outside of the normal sales process, or maybe it's income that isn't classified or categorized. And typically what you'll see is you'll see an ask my client or ask my accountant, which would be something like that, AMC category or an AMA category, ask my accountant or ask my client, and it'll just have a certain number in there, okay? And what that means is the accountant needs to ask the client or the owner, hey, what do these charges belong to? And so, okay, this $2,000, oh, you know what? 500 belonged to lodging and another 1,500 belonged to fuel. Okay, great. So now they can go back and input them in the right places as far as expenses, right, or income, right? And so you may see other income, ask my client, other expenses, and then at the end of the entire board here, what we're going to see is our true net income. Now, this net income comes after all expenses, after anything else or additional that may have been applied. So this generally gives us our net income, meaning operationally, we produce this much money. It costs us this much to produce that amount. We were left with 740. Out of all the transactions that coincided within the company, we kept $434,000 in our profit and our loss statement. So these are the basics to a profit and loss statement here. Now, yes, if you go out and you start reading company financials, K-12s, and all this other good stuff, what we may start seeing is things like depreciation in some of these files, amortization, taxes, interest earned, and many other individual categories here. So it's important to note that finances can be very complicated if you allow it, right? But as small business owners, it's important for us to make sure that we understand it holistically. So when we're filling out those charts of accounts, just like if you guys saw my balance sheet video where it talked about accounts receivable, right? That may be a word that we don't fully understand in the beginning, but in reality, it's money that's owed to us. So understand that we have the power to rename our chart of accounts to whatever makes sense for us. And so making sure that it's organized and structured the right way is half of the battle when it comes to being able to read and understand a profit and loss statement. And so if you guys haven't checked out the balance sheet video, then you definitely want to check it out. We're going to put it right here in this corner maybe, but it'll definitely be in the description below. We'll see you in the next video.